Hello everybody, welcome back to our CMA classes. This is Soumya Santosh, a CMA finalist, and today we are going to start our new chapter of direct taxation of CA final and CMA final students, and that is of assessment of trust and charitable institutions. So let's start. First of all, we have to understand what are the things which are going to be fall under charitable institution, which is done for charitable purpose, right? We know a bit about this too, but we have to go through few more things which are written in the under charitable purpose. So charitable purpose under section 2 subsection 15 includes relief of poor. If it is done for relief of poor, this is one of the purpose of charity, okay, or it is done for education, yoga, or medical relief is given, or it is done for the preservation of environment, which include watershed, forest and wildlife, and preservation of monuments, places, object of artistic historic interest, and one more last point of advancement of any of other object of general public ability. But there is one thing which is mentioned in this point, in this, the advancement of any other object of general public utility, which is only going to be constituted charitable purpose, but only if such activity is undertaken for the object of general public utility. Number first point says about this, that if it is done for the general public utility, the main object is to do the general public utility undertaken for this purpose, okay. Or the second condition says about this point is the aggregate receipt from the advancement of any other object of general public utility do not exceed 20% of total receipt of trust institution of the previous year. Once again, first of all, the last point of charitable purpose says the advancement of any other object. Advancement of any other object of what? Of general public utility. First of all, definitely it's going to be done for whom? For general public, right? The purpose should be for whom? For the general public. And if it is done for those general public, the receipt which came arising from which? This point, right? Again, that advancement of general utility of general public, right? The receipt do not exceed 20% of total receipt, right, of trust institution of previous year. Then only. If it exceeds, definitely then it's not going to be done for charitable purpose, right? So let me read all of the point which says about. First of all, if it is done for relief of poor, right? If it is done for education and yoga, right? Yoga was earlier, I think yoga was not covered in this. Later on, amendment were done, and yoga was included in the charitable purpose, okay. Or medical relief or preservation of what? The environment, right, or the monument, places and object. And the last point is about the advancement of any other object of general utility, general public utility, okay. So that was of what are the purpose of charitable institution, includes the charitable purpose, right? And these were the things which is included in charitable purpose. Hope so this was clear, okay. Let's go for the other point. A charitable trust can avail the benefit under section 11 and 12 of Act if it is satisfied following the following conditions. First of all, the charitable constitution only avail the benefits under section 11 if they are satisfying the following conditions, then only. Let's go for the conditions written below. First of all, the trust should be registered under section 12 AB. So this is one of the condition, right? Then only a trust can avail other benefits, okay. First of all, trust should be registered under section 12 AB, okay. The property from which income is derived should be held under a trust. For sure, if the property do not belong to trust, in that case the benefit cannot be taken, right? So the property from which income is derived, right, should definitely held under a trust. Third point says the property should held for what? Charitable purpose. right? If it is done for business purpose, then definitely it's not going to be fall under the conditions, right? Then the trust cannot avail the benefit, right? Trust should not create for benefit of particular religion, committee or caste. If it is, the trust is made to promote one particular caste or particular community, in that case the benefit of trust cannot be taken. Hope so this was also clear, right? So it should not be done for some community, not done for some particular religious or some particular caste. Hope so this point was also clear. No part of income should directly or indirectly benefit of settle or any other specified person. Definitely it should not done for particular caste, religion, person, community. So should not benefit any one person or any that person's relative family should not be get benefited from the the formation of trust. If the trust formation is only done for the beneficial to get the benefit of to get the benefit of trust for those person and his relative and his family, in that case that person, that institution is formed okay by that particular person cannot avail the benefit of trust. Hope so this point was cleared. Okay, property should be held for charitable purpose. This was also I guess mentioned earlier. If total income of trust exceeds the maximum amount which is not chargeable to the income tax in any previous year, then the account of trust have to be audited. So these are the points. If a charitable trust have to avail the benefit under section 11 and 12, first of all the trust should be registered under section 12 AB. Hope so this point was clear, right? If the trust, the property from which income is derived, okay, for what should be there, the income is derived only from the trust, okay, and it should be done for the charitable purpose, right? It should not be done for the benefit of any particular person, not for his relative, not for his family, right, or not for the particular religion, caste, community. Okay, it should only main purpose should be for the charitable purpose. Okay, general public should be get benefit from that trust from the formation of that trust. Okay, hope so this point was also clear. Once if the total income is exceeding the maximum amount which is not chargeable to the income tax, in that case what is going to happen, the trust should get audited. Hope so this point was clear. So let's go for some of these sections. Okay, and I'm also going to explain some of the explanation which is covered, some of the important explanation which is covered in this chapter. Okay, so let's go for it. Section 11 subsection 1. Okay, this is about the income of charitable or religious trust. Following income of the charges shall exempt from the trust. First of all, corpus donation. Okay, if that donation is deposited in some specified section, in 11 subsection 5, in that case only that is going to be exempt. So let's read out first of all what is written here. Corpus donation, if it is deposited in mode prescribed under sections 11 subsection 5, okay, then only it's going to be what, exempt, otherwise it's going to be taxable at the rate of 30%. Okay, 15% of second point says about the 15% of the gross income which can be accumulated or set apart. This is actually a standard deduction. Okay, whatever the total income is, from that 15% would be a standard deduction. Rest of 85%, from that 85% applied income would be deducted. Okay, that is one of the relief given for the trust. So that is the third point, applied income for charitable or religious purpose in India out of remaining 85% of income. Okay, so let me write a small explanation here. First of all, total income. From total income 15% is the standard deduction. Okay, this would be a standard deduction, right? And from this rest 85% of income, the trust can also avail the applied income deduction. So this is what, another deduction which is applied income, which is done for charitable or religious purpose only in India. Okay, so let's go for what are the things which is going to be included in applied income. So can you tell me, is there any expenditure related to revenue is going to be applied income, or the capital expenditure would also be included in applied income? Yes, in this case the capital expenditure would also be included in applied income. So let's go for it. And here's something which I have written. Applied income includes revenue expenditure, definitely capital expenditure. Income include donation. If any amount donated to any other trust under section 12AA or 12AB or institution under section 1023C, 10 subsection 23C, shall be treated as application only. Let me say it again. First of all, applied income include four things. First is capital, revenue expenditure, and donation, of course. And if any of the donation is given to any other institution which is registered under section 12AA, 12AB, right, or institution which is registered under section 1023C, 10 subsection 23C, okay, shall be treated as application. But only 85% of such donation would be as applied income. Okay, hope so this point was clear. Okay, if such amount is donated as corpus donation of such trust institution, then it is not treated as application, which is saying, let me say it again, if such amount is donated as corpus donation of such trust institution, then it shall not be treated as application. Okay, if corpus donation is given as donation for the other institution, right, in that case that is not going to be applied income. Okay, let's go for some of the explanation 3A, okay, which says, in case of religious trust for repair of temple, mosque, gurudwara, church or any other place notified under section 80G subsection 2B, clause B, as is going to be treated as corpus donation if following conditions are satisfied. First, such amount should be utilized only for repair of renovation of those gurudwara, temple, church, mosque and all, okay, and such amount should not donated to any other person. Okay, and maintain such corpus as separate identifiable, and amount should be invested in 11 under section 11 subsection 5, as we already read that corpus donation would only be exempted once if it is specified in the section 11 subsection 5. Okay, otherwise it's not going to be get the exemption. Okay, hope so this point was clear. Let's go for section explanation 4, which is amended in assessment year, which brings in assessment year 22-23. Okay, which says, if the trust amount applied this year, which means the current year, and applied amount is withdrawn from the corpus fund, it shall not be allowed. It shall not be allowed as application in the current year. Let me read it again. This says, if the trust amount applied this year and that applied amount is withdrawn from the corpus fund, it shall not be allowed as application in current year. Such amount shall be allowed as application in the previous year in which the applied amount is invested or deposited back to the corpus fund, and to the extent to its deposit back. Okay, what happens if the trust amount is applied? Okay, so we are not going to get the benefit in that previous year. What is going to happen? What I said, applied amount withdrawn from corpus fund shall not be allowed. Okay, it shall not be allowed in the current year. It's going to be allowed in which year? In the previous year in which applied amount is invested or deposit. Again, if the applied amount is invested or deposit back to the corpus fund, okay, and to the extent to its deposit back, in that case, in that year only, the amount is going to be deemed as applied. Okay, it's going to be applied income in that particular year. Okay, hope so this point was clear. It is treated as application only following conditions are satisfied. First of all, application should be in India. Application should not be by way of donation to the corpus of any other trust or donation. And section 40A subsection 3 and 40AIA satisfied an application. Carry forward and set off would not be allowed. Of excess amount application shall not be allowed definitely, and application would not be for benefit of any person in section 13 subsection 3. and this is the actually main point in this explanation. Invest or deposit back into the corpus within 5 years from the end of financial year in which the amount applied for the corpus. Okay, once it is applied for the corpus, once the amount is applied for the corpus, then within 5 years from the end of financial year in which amount applied, it should be deposited back into the corpus. Okay, if it is not done, then what is going to happen? It would be deemed to be total income of that trust. Okay, hope so this point was clear. Next point says about the amount applied for any loan or borrowing shall not treated as application in the current year. Such repayment shall be allowed as application the previous year in which it is repaid to the extent to its repaid. Okay, what happens? It is not going to be allowed as applied income. Okay, it is only going to be applied income in which year? In that year in which the, let me highlight it, in which it is repaid and to the extent to repaid. In that year it's going to be applied. Okay, in that year it would be amount applied from any loan or borrowing. Okay, hope so this is the same point of the previous point. Okay, so in the 1, 2, 3, 4, 5 point which I already discussed, explanation 4 of first point is same. This one, this one, this one, this one, this one. Okay, and last point says the repayment of loan made within 5 years from the end of financial year which amount applied from loan. Okay, so in within 5 years it should be repaid. Okay, repayment of loan within 5 years from the end of financial year which amount was applied from the loan. So this was also quite similar to fourth ka first part. Okay, so let's go for explanation 5 which says the when application exceeds income, which means the deficit, right? Can it be carried forward? No, it cannot be carried forward. Hope so this was simple thing. Okay, let's go for another explanation. This is added for the whole section 11. Expenditure of trust is allowed on payment basis. Earlier what was happening, right? The expenditure which was allowed on cash basis or accrual basis, whichever basis it was allowed, but from assessment year 22-23 it is added that the expenditure of trust is allowed only on payment basis, which means cash basis, right? Not on the accrual basis. So it's irrespective of method of accounting followed by trust, whether they are following the accrual method, whether they are following the cash method. If once the payment basis is done, the expenditure would be only allowed, which means cash. Okay, so let's go for section 11 subsection 2, which is exemption if income accumulated for this specific purpose. Okay, what is happening? I already told you 15% standard deduction is allowed, right? Rest 85% is the amount of the trust from which we can also get the deduction of applied income, right? Let's go for the other things which is mentioned in section 11 subsection 2. 85 of income is not applied during the previous year but accumulated of set apart, then such set apart income is not included in the income of the following condition are satisfied. Furnishing a statement to AO form 10 stating purpose and period for which such income is accumulated. Okay, what happens for the here we are talking about the applied income. Okay, so form 10 should be filled and maximum amount for 5 years, right? And what happens, actually the main purpose and period of that should also be mentioned. Okay, money is to be deposited within section 11 subsection 5, which is safe investment, and it should not be donated to any other trustee. This is also we are knowing also this point also. Okay, statement should be furnished before the due date and of the return of income under section 139 subsection 1 at least 2 months before. So this was the very simple things which we are very familiar about, section 11(2). Okay, so let's go for section 11 subsection 3, which is exemption withdrawn if. Okay, what happens if any of the condition is violated? Which condition? Under 11(2), under section 11 subsection 2. Okay, if any of the condition are violated, which if the money is not deposited under section 11 subsection 5, which is a safe investment. Okay, what if the amount is donated to any other institution, which means Here we have talking that this amount should not be donated to any other institution, right, any other trust. Okay, and what happens if the trust have actually given that amount, donated that amount to any other trust? In that case, the trust have violated the condition of 11(2), right, and statement is not furnished before 2 months of due dates. In that case, the exemption would be withdrawn, and income is going to be taxable under section 115 BBI at the rate of 30% in this year of violation. So if any of the condition under section 7 under section 11 subsection 2 is violated, in that case what is going to happen? Income is going to be taxable at the rate of 30%. Okay, let's go for section 11 subsection 4 and 4A. This is 4A. Okay, so business income of trust. First of all, what happens? Separate book of accounts are maintained to claim the exemption under section 11(1) and 11(2) on the business income. This is also quite simple thing. If what happens, as I already mentioned, that once the trust have crossed the basic maximum limit which is given the exemption, right, which is the exemption, if it is crossing that basic exemption, in that case the trust have to maintain the account, right, book of accounts, which to claim the exemption under section 11(1) and 11(2) on a business income. This we already know. Let's go for section 11 subsection 5, which is the safe investment mode for the trust, which I already told you that corpus donation should be deposit in which as per which section 11 subsection 5. So let's read out section 11 subsection 5. What is going to be that safe investment mode for the trust? Okay, if the investment by trust is done in, first of all we are talking about the investment, there are few more things which means deposit and all. Okay, so first of all, if they are invested in government saving certificate, first is government saving certificate. If it is done in government saving certificate, unit of UTI, mutual fund, central government, state government securities, debenture of any company guaranteed by government, equity share of depository, shares of stock exchange or subsidiary of stock exchange. Okay, if the investment by trust is done in this case, in these following case, in that case that is going to be, this is actually specified in the section 11 subsection 5. Let's go for if the investment by the trust is done in any of the immovable property, or investment done in by the trust in board or bonds of public company which provides a long-term finance, and bonds of approved financial corporation. Okay, so once they have invested in specified things, in immovable property, in bonds again of public company which provide actually a long-term finance, or a bond of approved financial corporation. So first of all, investment in some specified things, which means government saving certificate, CGSD securities, debenture and all. And immovable properties and bonds. This was the investment by the trust under section 11(5). Let's go for the other points, which is deposit. If the trust have deposit the amount in post office saving bank, first is post office saving bank, second is schedule bank, cooperative bank or industrial development bank. In that case also that is going to be specified under 11(5). Hope so this point was clear. And this is another investment or deposit in public sector company, investment or deposit in public sector company. So there are three things, first of all, investment, deposit and investment and deposit, right? Hope so this is clear. Let's go for section 11 subsection 6, which says the depreciation is not going to be allowed. Okay, what happens if the cost of acquisition is claimed as an application amount? In that case the depreciation amount is not going to be allowed for the trust. Okay, either the trust can claim the cost of acquisition, which means cost of asset, or what, the depreciation amount. So section 11 subsection says the trust cannot go for two things. They can only one thing. Okay, if they have already claimed the cost of acquisition, in that case depreciation claim cannot be claimed, which means that is not going to be allowed. Okay, if cost of acquisition claimed is application of income, should not depreciation, in that case depreciation allowed cannot be claimed. Okay, cannot be claimed. Let's go for the last section of today's lecture, which is section 11 subsection 7, which says exemption under section 10 is not available. Okay, in case of any registered trust, 12AB wale, ठीक है, in case of any registered trust or institution for which registration is effective in previous year, they cannot claim any exemption under any provision of section 10, but there are some exemption. As you know, exemption do exist everywhere, right? So they are saying other than relating to exemption of agriculture income, so agriculture income under section 10 subsection 1 is allowed. Remember, these explanations are going to come in your questions. For example, as I told you, right, that the expenditure which is related to capital expenditure, right? So question could come like, this is one of the expenditure, the capital expenditure done by the trust. Okay, so in that case don't get confused there, capital expenditure is allowed. Okay, again second thing, if it is done for some founder benefit, right, in that case that is not going to be allowed. That expenditure done for some any particular particular person, particular community, particular religion, particular caste, the amount is not going to be allowed as a deduction of trust. Okay, so please make sure, please read and go through each and every point. Okay, so let's go what I told you. Any deduction exemption is not going to be available under section 10, but there is one exception, 1, 2, 3 exception, which says if it is done for the agriculture income, okay, under section 10(1), that exemption is allowed. Okay, or section 10 subsection 23C or section 10 subsection 46. For these cases the exemption is going to be allowed, but not for 10 other than this. Okay, so only these are allowed as exemption. So till this, go and read the provisions, go through the exemptions, go for the explanation and sections. We'll continue the other remaining sections of this chapter. Till then, this is Soumya.